This is the Financially Simple Podcast, a show dedicated to destroying the complexities of money for today's small business owner. And now, here's your host, pizza-loving, certified financial planner, Justin Goodbread.
Welcome to Financially Simple. This is a finance show for small business owners about money, how it works in our business and personal lives, and how we can build wealth to be financially independent. I'm your host, Justin Goodbread. Today is episode number 45. And today's episode is titled The Business Plan Part 2. Now remember, we're in a series on how to start a business, and today is the fourth part of the series. In our last episode, we addressed the basic questions of a business plan. Questions like, what is a business plan? Why do I even need a business plan? I heard that just today. Why do I even need a business plan? And when should we build a business plan? We hit a high-level overview on the various sections of a business plan. Today, I want to do a deep dive into the specific components of a business plan. And as we discussed in our last episode, there are 9 different components. Now, as a note, if you Google business plan, you may see that some people say there are 5 parts, there are 7 parts, or there are 9 parts. The content can be arranged in different orders, and the number of points can be shortened or lengthened. I particularly like the structure of a 9-part business plan, but perhaps you say, you know what, Justin, I want to only do 5 parts. Look, friends, I don't care how many parts we have. I don't care how the content's organized. I want the business plan to be a working, breathing document in your business so that you and the readers can decipher what you're trying to accomplish in your business. That's all a business plan is. So, look, I know there's some technicalities. I had one of my clients in, and we were talking about this, and he's an MBA graduate, and I'm like, dude, once you get an MBA, you actually lose all your common sense for business. And he and I were laughing. And he's like, there's some truth to that. I said, yeah, many MBAs, they learn the book works, but they don't understand how the real world operates. And then I got to business plan. He said, well, there's only 7 parts to a business plan. I said, actually, I use 9. Oh, that's just a waste. And I showed him. He goes, man, that actually makes a lot of sense. I'm like, yeah, well, it's just the way I think. So let's dive into each of these areas. The first section of a business plan is going to be the company description. Now, this is probably one of the shorter sections of the business plan, and all it's there to do is give a high-level view of your business, explain who you are, how you operate, and what your goals are. In the company description, you're going to include things like the name of your business. I actually saw a business plan one time. It was a great business plan. I just didn't know what the name of the company was. It's like, dude, what's the name of this company? He's like, oh, man, I forgot that. But it's going to include the name. Yeah, it's going to include the type of structure, the legal entity. And friends, today we just recorded an episode with one of our tax attorneys, and he's going to dive deep into the differences between corporations, the sole proprietorships, and partnerships, and all this fun goodies. But it's going to talk about the legal structures. A business plan may give a brief history of the business. Who started it? Why was it started? What's the deal with it? What's the nature of the business? How does it meet a supplier demand? Some businesses plan in the company description may talk about a specific product or services or customer. I've seen people, they say, hey, I service so-and-so big company. That may be part of your business plan. It's going to give a little summary of your growth, your company growth, including a little bit of financial insights, market insights. Basically, friends, part number 1 is just going to be summarizing all the other contents within the plan itself. So that's the way I look at part number 1. It's just the summary. The company description just kind of summarizes everything. A little bit of detail, not just like, hey, 1 sentence, this is what we do. And we'll get to that here in just a second. The second part of the business plan is called the products and services page. Now, in this section, clearly, you're going to describe what your product or services is. What are you selling? How is your product going to meet a particular customer and benefit? How is your product or service going to meet a need in the marketplace? So you're going to include details about who are your suppliers. What does your product cost? What's the net revenue expected from the sales? Is there any intellectual property including the company? Or are you going to need any R&D or research and development to get the product off the ground? So let's say we're selling water bottles. I use that because I typically have a water bottle in front of me and I get thirsty talking this much. So let's say I want to sell water bottles. Well, I'm going to have a plastic supplier. I may have to have a water supplier. Maybe there's some other suppliers. And then I'm going to know my water bottle costs me 5 cents to make, and I sell it for 20 cents. And obviously, I don't think it costs 5 cents to make a water bottle, but maybe that's you're going to share the details of that. If there's R&D, maybe I need to research out a way how to create the water bottle and fill it with water in the same process. Maybe that's possible. That's R&D. Maybe there's some intellectual capital. Maybe I've thought of something, some property on how to create a water bottle with less plastic that cuts my cost significantly lower than the competition's. So in the product and services area, you're going to describe in detail about your product. It's often common in this particular area for people to use pictures or diagrams. If there's some sort of patents, I've seen patent pictures inside here. If there is a process, I've seen process pictures inside this area. So like in my company, Heritage Investors, we have a process to service business owners. We have business owners that come in and we show them how to grow their business and how to grow their personal financial net worth. And that's a process. So we use a picture to describe that. Maybe you have a picture there. They do say a picture's worth 1,000 words. So maybe that's where you include it. In general, this section is going to include detailed descriptions about your product. Plain and simple. It's going to explain how the market plays effect, the advantages and disadvantages of your product over the competitors. It's going to talk about your trade secrets, your development activities, and the list increases. It's going to talk about the product in detail. Now, the third section is the market analysis. And this, friends, is perhaps the most difficult section of a business plan. And it's probably the most important, candidly speaking. We can know all about our product. Most of us can tell the story. We're great salesmen. But then when it comes to this point about the market analysis, we get hung up. And the market analysis is the heart. Typically this falls dead center near the center. You already know the type of company you hope to build. And the market analysis will prepare you to be successful in achieving the type of company you hope to build. It'll give you a better understanding of who your target market is and how you can make an impact toward this target market. So underneath the market analysis, there's going to be many, many subsections. And so we're going to go through the subsections of the market analysis here. And until I say we're on the fourth point, this is all still part of the third point. So just keep that in mind. So the first subsection of the market analysis is going to be a description and outlook. First, you're going to give a brief description of your industry, the historical growth rate, and any applicable trends. You also may need to get some customer groups information. So if we're talking about my water bottles, I may go back to find out when did people first start putting water in plastic bottles? What has been the growth of the water bottle industry? What are the trends? I've noticed in my lifetime, which is not very long, I've noticed that water bottles used to be very thick and heavy, almost like I can't even hardly say a Gatorade bottle anymore, or a Powerade. They used to be really thick and you could throw them at things and they wouldn't bounce. Now they get kind of flimsy. The plastic's gotten smaller. So that's a trend. And I'm not even the water bottle business, but you're going to give a description and outlook nonetheless. You're going to talk about who your target market is. Well, if I'm a bottle manufacturer, I need to find the water companies who want to put their water in my bottles. So that would be a target market. You're going to talk about who your ideal customer is in this target market area. You're going to talk about the sector, the industry, the niche. You're going to state clearly who is in your target market. If you're in business already, you may want to include past sales. If you're not in business, you may want to look at your competition and what their sales have been. What's the projected growth of this type of business? So that's where the target market comes into play. Another thing underneath the market analysis we're going to deal with is the key characteristics of your potential customer. What are the primary needs of the customer? If I'm selling water bottles, then the primary need is probably that I have a bottle that holds water. That's simplified, ultra simplified. But let's say I'm in my world of Heritage Investors or Financially Simple. I deal with business owners who want to make the world of finance a lot less confusing. They need help growing their business. They need help growing their net worth. That is what my potential customer needs. They need someone to take this world of finance, taxes, law, insurance, investing, and make it ultra simple for them. Because they're business owners. We have too many other things to deal with. So that's the key characteristics. And what trends, underneath my key characteristics, what trends are affecting what the customer needs are? The trend that I see is the world of information continues to get bigger and bigger and bigger. And there's more noise out there for us business owners and trying to figure out who are we going to listen to. So that's a key characteristic. Another thing we look at is the potential market share. What share of the market within your industry do you hope to capture? Do I think that I can create water bottles that are large enough to take over Coca-Cola's water bottling industry? I think Coca-Cola does Aquafina. It might be PepsiCo. One of them do Aquafina. Do I think that I can create enough water bottles for them to be my customer? Perhaps that's your goal. But you're going to put your potential market share. What obstacles are you going to use to overcome the market share? Is there a specific demographic study or statistic that'll help me overcome my market share to get to where I want to be? How many businesses are currently in competition against me right now? Or is there a void I can fill? That's all within the market share. Another point here is, what's our price and what's our gross margin? What is going to be our pricing strategy? Are we literally going to go to the market with the idea that everybody needs a water bottle and offer them for 10 cents only to find out that we can have them imported from China perhaps, or from Mexico or from Brazil at a lot lower price per widget? I mean, it's possible. I haven't gone on Alibaba, however you say it, to look at the price of water bottles, but perhaps you can buy 100,000 water bottles at pennies on the dollar, or even fractions of a penny. A hard one that's in this is your competitive analysis. Here you're going to show information regarding your competition. And I've dealt with small business owners that's like, isn't that cheating? No, friends. You want to know who your competition is. You want to know what your potential market share is and your point of entry into this market share. You're going to list your direct and indirect competitors and barriers, as well as their strengths and weaknesses. If I'm going up against another water bottle company, I want to see how big this firm is. I want to know where their weaknesses are. I want to be able to prove it through my sales and marketing. My next point, I want to be able to prove why my water bottle is better than theirs. And finally, we're going to deal with regulations. Are there particular regulations for our water bottle company that we have to know about? Is there a particular plastic type? I'm sure it's got to be food grade because we're drinking from it. How do we keep contaminants from getting in the water bottle? How do we keep bacteria from growing in the water bottle? Those are all regulations I'm sure our government has in place. Now, look, I haven't checked the regulations of the water bottle industry. I have a little bit better things to do with my time. Now, if I were going into business, you can bet that I would know all the regulations as to the water bottle industry and those that are probably not part of the water bottle industry. So all of that content is in the market analysis. So in the market analysis, we're dealing with this description and outlook, the target market, our key characteristics, our potential market share, our price and gross margins, our competitive analysis, and our regulations. Whew, no wonder why people have a hard time with that. But friends, if you know your competition in your industry, then number 4, which you're fixing to jump into, is going to become super efficient. The reason why number 4 is not efficient for many people is because they don't know number 3. So that's why I say number 3, the competitive analysis, is so important.
You are listening to Financially Simple, destroying the complexities of money for today's small business owner.
So what is number 4? The fourth point on our business plan is the marketing and sales of our company. In this part of our business plan, it's simple. We're going to explain how we're going to get our product or service in front of the prospective customer. That's simple. We're going to summarize our sales and marketing. Now, in this section, we're going to talk about how we're going to enter the marketplace. Are we going to use word of mouth, crowdfunding, social media, national campaigns? So let's say we have a water bottle company. Chances are I'm not going to be able to enter a marketplace with word of mouth advertising to buy water bottles. That's probably not going to happen. But if my product is well designed enough that I know there's some penetration to the market, perhaps I could get crowdfunding. Perhaps I could go on to something like Kickstarter and say, here is why my water bottle is so much better than the competition's water bottle. Who wants to invest in it? Perhaps I can share on social media, shoot some videos and go on YouTube and talk about, here's how my water bottle biodegrades a lot faster than the competition's. Maybe I do go in and pay for some national campaigns. So in marketing and sales, we're talking about how we're going to enter the marketplace. But you're like, Justin, I already have the business. I'm already in the marketplace. Okay. You're going to explain on how you're going to promote your business to your customers. You're going to detail the cost, the pricing, the promotions, and the distribution. So many times I help entrepreneur doctors, and they'll start up a business, and I'll say, guys, we got to show, or gals, I use guys a lot as a generic term. I'll say, we got to show how we're going to promote our business to customers. How are we going to go into this new business area? Maybe we just bought out a retiring dentist. How are we going to take the current patients and get them to talk about us? So that's where your cost, your pricing, and promotion comes into play. In the marketing and sales area, we're going to explain how our company will function. What is the average life cycle? Are we dealing with a one and done? The coolest life cycle I've seen is the razor blade industry. I think it's such an interesting business to me. Think about it. Now, for us guys and gals, you go to the store, you buy a Schick Mach 3 or Gillette Mach 3 razor blade. It's been around since I was a teenager. And they sell you the handle part of it and 2 or 3 razor blades. And lo and behold, you pay $5, $6, $7, $10 for that, whatever the number is. Then you go back to the store to buy the replacement blades, and they're the same price as the handle. I actually have seen people who their razors get so nasty, they just go out and buy a new handle because they just get worn down or whatever. I just think that's interesting about how the marketing life cycle is in that particular area. So that's what you're going to look for. You're going to explain how the company will function, what the operating cycle is. That razor blade, they have it built in such a way that life cycle is completely forthgoing because we all have to shave, or those of us who do shave, we have to shave. So much so now there's other companies like Dollar Shave Club, or I forget there's another one I saw the other day, that they've even created life cycles where you just pay a subscription. They deliver a razor blade to you in the mail once a month. I just think that's an interesting life cycle. So after we deal with our marketing and sales, then we're going to go to number 5, our organizational management. So here's where you're going to explain who your key team members are. Are there multiple owners? If so, who are the owners and what's their background? What's their history? Is there a key management team in place? If so, you're going to maybe put your bios of your management team. What's their pedigree? What's their credentials? If there's a board of directors, who's sitting on the board of directors? Who's giving you advice? So there's going to be an org chart or an organizational chart, shows how the information moves and how decisions are made. It's going to give the details about who your advisors are, who's your attorney, who's your CFP, who's your CPA, who's your attorney involved, who's the board of directors. So the organizational management team is going to give you a breakdown of all those areas. The next part is going to be the request for funding. And underneath the funding area, this is talking about how are you going to fund your business. Now keep in mind, most businesses fail due to a lack of capital. That's just a proven statistic. You're going to need to explain how you're going to fund your business both in the short term and in the long term. You're going to have to talk about strategies. If you're going to borrow money, how are you going to repay the capital? Are you going to do it through acquisition of other businesses or assets or products? Are you going to make prepayments from cash flow? Are you going to sell the business as a possible future buyout? See, inside the request for funding, you're trying to describe how much money you need, and if you don't need money, how did you get the money? So I saw one business, they had a business created, and I got to be careful because I don't want to give too much away on this one. The business needed about $600,000 over a period of 3 years in order to become sustainable. And they had about $400,000. So we had a shortfall of $200,000 based on the projections. So we had to figure out how to come up with that $200,000 before the investors would invest in the business. So that's where funding comes in play. Another area of the business plan is the financials. Now, this is a section where you're actually going to build a pro forma. And basically a pro forma is a projection of the future finances. It's going to make some guesses as to what the income and expenses are for your company. So in my pro forma, and I have one, I use it in my business. We use it in our meetings. I use it in our annual meetings to show where the company has been and where it's going. I use the pro forma to incentivize our employees or our team members to help them reach their particular goals. So on my pro forma, I know how much revenue I derived out of my business last year, for example, 2017. I also know how much revenue I want to hit this year. And if a revenue comes in this year, I know all the expenses that I incurred last year and some expenses that I'm going to incur this year. Some key targeted expenses that I want to incur this year. I know what my net profit should be if I hit my revenue numbers. And I can take that number and I can make an educated guess based on the history of my business to show that, you know what, it's possible that we can grow at 20% for the next 10 years. Maybe you're in a business that can grow at 7% or 30% or 50%. What a pro forma does is it shows you what your future is going to look like. And if you purchased a business from somebody, then more than likely you're going to have the financials for the last 3 to 5 years. Now, if you didn't purchase a business and you're starting from scratch, friends, let's take a guess. It's a educated guess here on trying to build a pro forma. But in the pro forma, you're going to have things about your historical financial data, the realistic projections. And notice I said realistic. We're not trying to make the pro forma look so good that everybody and their brother want to invest in it. We talked about the reason for that in our pro forma planning for selling a business. And there's some key reasons why you've got to be realistic here. But that's where the financial pro forma, financial modeling comes into play. Now, we're almost done. We only have 2 more sections here, and I'm sorry for being a little longer than normal. The next one is the appendix. Now, the appendix is not like you see the appendix in a book. This section is often restricted. This is a needs-to-know basis. Investors, creditors, partners, but not the general public. The appendix is going to include things like your proprietary and your confidential information, things that are not going to be easily accessible to all individuals as they read your business plan. Things like maybe your market study details. Do you really want your hard research about your company to fall in the hands of those competitors? No. You may have your reference letters involved. You may have your personal business or credit history, patents, permits, intellectual property, contracts, contact information for consultants. You may just put appendix inside your book and then keep all this stuff separate. So whenever you need to show it to a creditor, an investor, a banker, a partner, etc., you can grab this information. And last but not least is the executive summary. Now, I saved the best for last because the executive summary, when you open up the binder of your business plan or you open up the PDF of your business plan, this is the very first section the reader's going to see, which is why it's the last point or the last section that the business plan will be written. You say, Justin, should we start off with the executive summary? No. The executive summary is going to give an overview of the entire business plan, and it's got to be written in such a way that it captures the reader's attention, or it makes them lose their interest. Sometimes we write executive summaries for both reasons. It's a critical part of the business plan. The summary will basically tell the readers the history of your company, where it is today, the direction it's headed, and where you see potential customers' potential success. Whoa, that's a lot of information. As you can see, a business plan is deep. But writing a business plan requires commitment, time, resources to ensure that all of the relevant information is present. It's a crucial document in securing the funding of creditors and investors. A business plan will help you strengthen your business. I wish you could hear the passion for the business plan. It's key. You're like, Justin, I've never done this. I'm super successful. Kudos. That's awesome. There will come a time when you have to have a business plan. Whenever you sell it, you're going to have a business plan. I promise you that. So friends, if you've not done a business plan, take some time. Look through it. You may know most of this stuff from the top of your head. Let's commit it to writing. Let's put it somewhere and let's study it and use it to help us grow our businesses. And with this introduction to business planning, I'd like to thank you for staying with me for this little longer than normal episode of the Financially Simple Podcast. And as always, you can find links to today's show notes in the Financially Simple blog under the heading podcast. If you like the show, please subscribe. Share the podcast with other business owners. Feel free to drop me a note about a particular topic that you'd like for me to discuss. In our next episode, we're going to take a hard look at lending from a banker's perspective. We have a guest coming on the show to talk about what bankers look at when they're lending for startups. Friends, while you're on the blog, financiallysimple.com, you might want to sign up for our weekly newsletter. Some of the best writing I do is sent out in our weekly newsletter. And you can stay up to date with tax planning tips, business planning tips, wealth management tips, and so much more. As I say every week, life is hard. Writing a business plan is hard. Life is good. Life can be frustrating. Money certainly doesn't have to be hard or frustrating. Let's continue to make our lives at least financially simple. Hey, y'all go out and create a great day.
You have been listening to the Financially Simple podcast. The information in this show is for informational purposes only. This show is not investment advice. Instead, seek help from a competent financial advisor. Justin Goodbread, CFP, is an investment advisor representative of Heritage Investors, a registered investment advisor.